Speaking of disagreeing and being confused, Coach, feel free to stick around and be part of this conversation as we slide our way into the markets. Um, I'm going to skip around just a little bit, kind of say rapid fire, but there is some dissension among the ranks, Guy Adami, on what oil and OIH are going to do. If you have Carter Braxton Worth and look at his charts, he's saying it's going to pull back. He doesn't see OIH doing anything particularly special. You're saying, hey, I think maybe a little bit of a pullback and then oil to 100. I'm very confused. Straighten me out.
Last time we talked, Ned, I think the OIH was trading either side of 235, and we had the conversation, look, if you've enjoyed this run from 175, the right thing to do is to take some money off the table. I said, I can understand why you would do that. I still think oil grinds higher. Now we're in an environment where there's seemingly a bit of a détente in terms of things that are going on in Europe, Russia, Ukraine. Apparently, Russia's now looking for an elegant way out. We'll see if that comes to fruition, and oil's pulled back a little bit. So the OIH, which again topped out at 235, seems to be faltering here. You're at the top end of the range. I will tell you, I'm going to stick by this. I still think oil goes significantly higher. And when I say significantly higher, well north of $100. And I think the OIH has potential to get to 280 sometime this year. But I can understand why people are getting a little antsy at these levels, Ned.
Yeah, and there was some speculation that OIH, if oil did hit 100, would get to 300 and 300 plus. Is that still possible, or you think
never happening? Never happening. It would literally have to be World War III for that to happen, Ned. And I'll just say this: I mean, the dissension in the ranks. I mean, Guy and I often disagree on stuff, and I think we like to kind of lay out some pretty decent reasons for our views here. I was kind of fading this oil move, especially in the equities, large integrated. I mean, when's the last time, and Danny, help me out here, when's the last time it made a whole heck of a lot of sense to bet on oil stocks at multi-year highs? I mean, I'm looking at the large integrateds, the XLEs, the ETF that tracks those names. Exxon and Chevron make up over 40% of the weight of that. I'm just not a fan. I know the Guy has played the OIH, the oil services, where there's a lot more, it's just beta. And those they've been a great trading vehicle over the last year. Look at the moves that we've seen. We've seen a number of bounces from 170 to 230, then back to 170, then back up to 225. And here we are back at 230 after we were just trading in the low 170s in December. So great trading vehicle. If you look at it as where it is relative to its 5-year highs, you see that something's broken in these stocks, in my personal opinion. So I'm just not betting for a breakout here. Guy's got some very good reasons why he thinks oil's harder. He's much smarter than I. He was trading it back in the 70s during the OPEC issues and no, I'm just kidding about that. But
no, I would say, Dan, I would say
for me.
Something's got to give, right? Either the stocks are going to catch up to where oil is, or oil's going to start to come down, or maybe they just kind of meet in the middle here. So listen, I mean, it's probably overweighted now by several funds. Probably not there completely yet, but it's people have jumped on this train. It's been a safe place to play. When you see what oil prices are doing, you can feel good about owning the energy stocks. You had Chevron and Exxon come out with incredible quarters. They're not only incredible quarters, they're buying back stock, they're increasing their dividends. So it's checking the box of kind of flight to safety, ironically here. And with the Ukraine-Russia stuff, certainly that elevated it. If that calms down like it looks like it might be walked back, certainly oil is at risk. Carter Braxton Worth pointed out the other day after making a great call, as you just mentioned, on being long oil. He says it's absolutely time to take some chips on the table. He sees the price receding. However, you can have the price recede without these oil stocks trading down because, again, I don't think they've caught up to where oil prices are. No one's using $90 oil in 2022, 23, and 24 earnings for any of these companies. That's kind of what I would say.
Ned, Dan makes fun of me, but I have an advantage in the oil space because J. Paul Getty and I spent time at Oxford together back in the day. So I'm very well versed in the what do they call it? Texas tea, as they say.
Wait. So you and Jake Paul spent time in Jake Paul?
Wait. Just so you know, Coach, Guy has no idea who Jake Paul is. You could put a gun to his head right now. Could not tell you who Jake Paul is.
Sure,
Jake Paul. He's Jake Paul is the bass player. Yeah, no, I know who he is. I have all his albums. I think he's an incredible influence on my life.
No, it's the JP of JP Morgan guy. You got it wrong. It's JP Morgan. That's who that is. So I just want to make it clear. Yeah.
I will give you $100 right now if you can tell me who Jake Paul just fought.
Jake Paul just fought Jake LaMotta, and I have no idea who Jake Paul is. Come on, Coach.
Oh, he is one of the biggest YouTube stars in the world. and now he started a boxing promotion. He just fought Tyron Woodley, and he is going head up against the UFC on social media. I'm just going to help you out every week.
And one of the founders of Instabet, which was a spun out of SimpleBet, so he's crushing it, and he's actually he's done some great stuff. He's with 305 Ventures. He's doing some venture capital stuff. So at least he's using his brain. For
Is he the same Paul that bought the Pokemon cards for $2.5 million that turned out to be fake, or was that Logan Paul?
Don't know about. Well, he's got the brothers are kind of one and the same.
Moral of that story is don't buy Pokemon cards online, guys.
Don't buy Pokemon cards.
Hey, so you maybe don't buy Facebook or Google either. I want to put this into the whole NASDAQ complex in the sense of the conversation of, is 225 really in play for Facebook? Is 2750 really in play for Google? And if so, looking at the NASDAQ again, watching the market calls that you all have been doing, Carter Braxton Worth and his charts, he's talking about the IWM and he's talking about the NASDAQ with the possibility of really rolling over. So I guess offer your thoughts on that, and then how do we play it? What do we do?
Well, Ned, as we're doing this on Tuesday, Facebook made another 52-week low today. It continues to do that seemingly every day for the last week since earnings of 219 and change. And there really doesn't seem to be a floor right now for the name. I thought it would find a home basically around 250 or so on sort of capitulation selling, given that the stock had made an all-time high back in August. But it's not finding it now. What I will tell you, and Dan will echo this, you saw a very similar price action in the summer of 2018 when the stock had made a then all-time high of about 235, literally into Christmas Eve of that year when it bottomed out around 104 or thereabouts. And this move is mirroring that, so we'll see. I have not seen any indication that it's over. And Dan has some thoughts on both that and Google as well, which, by the way, has really traded poorly since earnings.
Yeah, so Ned, it's interesting when Facebook, a lot of people are saying, we got a 30% peak to trough decline in just a week or so since that bad fundamental news, which was, as Guy said, very similar to the setup that you had in 2018, and it went lower for months. And so sometimes when you see an overshoot to the upside, you'll see that to the downside. I would just mention that this time around, this is not happening from an all-time high. I mean, the stock traded $384 in September when it gapped lower just last week. The stock was trading, it was down 20% from those highs. So to me, I think you probably see lower lows. You probably see this stock near 200. I do think you're going to see a lot of individual investors and institutions kind of load the boat at some point in the not so distant future. The one that's more interesting to me, if you're trying to figure out the course of the NASDAQ in the next few weeks or the next couple of months, is Alphabet. And, when the market was in a free fall just a couple of weeks ago, Apple, Microsoft, $5 trillion in combined market cap. Those two companies make up, 15% of the S&P 500, believe it or not, of the weight. And then Alphabet the next week. They all put up good quarters and guidance. The stocks traded well, and that kind of put a little near-term floor in the market. Here's the deal. Alphabet, which is the ticker GOOGL. You know it as Google, people. That stock gapped up 8.5% to a new all-time high. It was the first mega cap company to make a new all-time high in what was clearly a market correction. It's given it all back in the last week. It's filled in the gap, as we say. That is super bearish to me, which makes me believe that keep an eye on Microsoft, keep an eye on Apple. If there's any reason for those to go lower in the next, couple weeks, couple months, you're going to see new lows in the NASDAQ.
Danny, you talked about the generals selling off. Have they sold off yet using Google, Facebook, Apple, and especially Tesla? You really honed in on Tesla. You said you wouldn't believe the sell-off was complete until Tesla had been sold off. Are we there yet?
No, we're not there by a long shot. But I want to say at least, Dan's been talking about the generals being shot, and they've been a lot. There's been a few generals that have been shot on the battlefield here. And what's interesting is that Amazon, I believe, really kind of saved the NASDAQ or the Qs, if you want to say near term. I mean, that's a, $1.6 trillion company, I think, Dan, or something at this point. I don't know exactly what the market cap is on that. But, I mean, that was a lot of market cap that came back into the market on a 15% move. That's massive. You're seeing people now stock pick a little bit more, right? It's not about owning the Qs. It's about, I want to own, the Amazons of the world. I don't want to own Facebook. So I think we're seeing more of that go on throughout the year. I think that will continue. I don't think we're out of the, in the clear by a long shot. And I think Tesla, I've always said, being the original meme stock, it does not trade on fundamentals. It's one of those few kind of top 4 or 5 that does not trade on fundamentals. And Facebook, I will tell you this, it's not trading on fundamental. I mean, I'm sorry, let me say, Facebook right now at a 16 or 17 PE is telling you it's not a buy the dip. What is it? It's telling you there's something potentially structurally wrong with the company. It's telling you that they're losing market share, that they're losing daily active users, that people have turned them off. I think that's what it's telling you, and that's much more disturbing to me than trying to figure out if the stock's a buy at 225, 200, or 180. It's going to have its price at some point, and it will kind of level out here. But I think it deserves a deeper look here, and I think we're seeing investors discern now between names that they own. It's not just about owning the ETF itself. So.